All right, I'm gonna do a quick one on charting. And so with charting, there's a few things that you want to do. We talked about a little bit in the last video with how to draw trend lines and stuff like that. Let's talk more about trend lines. Trend lines are one of the best and easiest to do indicators, and I can teach you really easily. Yeah, I do consider trend lines like an indicator basically. And I can teach you really easily how to do them in a way that's pretty reliable. So first, I'm going to take out volume for now while I'm drawing them, and then I'll use volume to check later whether or not I was pretty accurate about the indicators, if it was actually a line that was relevant. So like I was saying earlier, one of the ways you tell if a line is relevant is whether or not there's a lot of volume there. And if there's a lot of volume, that means that a lot of people traded that line. And whenever price touched that line, did a lot of trades come in? Because if so, that means that a lot of people thought the line was relevant. And that's, once again, goes back to the kind of the core principle that I try to use when charting, is that it matters. What matters is what everybody's doing. Whether or not you want to go with everybody is a different story, but it does matter what everybody's doing, because that means that's where the liquidity of it is. And so the whole thought behind my trading is, or most of my trading, a lot of my trading is involving liquidity. Now, with trending markets, it's going to be a little bit different. So, I started trading Bitcoin and this, I bought in here and got onto leverage exchanges here. I had been, spot purchasing and stuff like that back through here, and had a few small holdings and stuff like that through that, but I'd never been leverage trading. And I do think that leverage trading is better in a lot of ways. It's worse in a lot of ways too. It's more dangerous in a lot of ways. But it will make you a better trader if you leverage trade. Anybody can make money in a bull market spot trading. All they do is just buy and then just hold, right? Super easy. And so anybody can do that. But if you can learn how to leverage trade, then you can make a lot more. And not only that, you want to start, one of the good things about leverage trading is that it forces you to actually have trades, and not just like, like I said, during Genius season, it's really easy for it to, for you to just buy and make money. Genius season being, the bull market. And so with leverage trading, it's forcing you to place a stop loss and forcing you to actually start taking trades. And also on top of that, you don't have to have all of your coins on the exchange. So say, for example, you own, 10 Bitcoin, right? I don't. Some people do, and some of you might. Say you own 10 Bitcoin. If you have all 10 Bitcoin on your exchange and that exchange goes down, which isn't something that happens infrequently in crypto, it happens a lot in crypto, and that exchange goes down, then you might lose all 10 Bitcoins. But if you put one Bitcoin onto a futures exchange like Bybit, which is a no KYC exchange, which is what I use and which I recommend you use, and then you just use 10x leverage, you're able to hedge your entire portfolio. You're able to, synthetically sell your Bitcoin if you think that something's going to price is going to go down or something similar. And 10x is a pretty good starter leverage to learn at. But the leverage really doesn't matter that much. What matters is your risk amount. We're getting away from the charting stuff. Anyway, so you want to find a line when you're charting, when you're making trend lines. You find these trend lines, and after you find them, you can kind of confirm them, right? And you confirm them by, like I said, you look at the volume. So you want to see if volume came in when the trend line was getting touched. So when price was around the trend line, we had some volume come in right here. People were buying it. Up here, we had some volume come in. And then, down here. So the trend line looks pretty decent. One thing that, this is rough. This is me really quickly doing it. If I was paying more attention to it, I'd be looking at different time frames too. So I'd be going to start off at the weekly. And there's a big debate between a lot of people and not between me, that I don't partake in, that people that say that, it matters a lot that you draw the line it has to be drawn on the wicks, or it has to be drawn on the closes. And it really isn't either, in my opinion. It just has to be drawn wherever there's the most consolidation around the line. There's some people that are probably drawing this, way different than me. Maybe there's somebody drawing it like this. Actually, that's probably not a bad way to draw it. It's kind of a cool way to draw it. But anyways, it doesn't matter. So you'd start on these higher time frames and you find a line or a trend. And, it matters because people are doing it, right? That's the line I like the best. This one. Matters because people are doing it. So you see that we saw there's volume and stuff there. And once you have that line, then that's a level that might be better than a horizontal level sometimes. Sometimes these trend lines will fall in between horizontal levels, and people that only use horizontal levels are going to get blown out. They're not going to be able to, or maybe not blown out there. Maybe they do get blown out, or maybe they get, they don't get filled. And then there's also these like horizontal levels. So that's trend line. Trend line can form levels. And actually, before we go to horizontal, let me show you one more thing here. Whenever you draw a triangle like that, see that triangle that we drew that we said was pretty good? One way that I like to use to test it is to see whether or not the center point is also a relevant level. Because if the center point's a relevant level, then I think you've done pretty well with making the triangular, it's a consolidation pattern. I think you've done pretty well with that if the center line is pretty good. And the center line is level here. We've got a lot of touches here, here and here and all through here and here. There's a lot of consolidations. It's clearly a level here at the 7,300. There's a yearly close around there too. Definitely a level, and I like that it comes at the apex of that triangle, because this is a little bit deeper into the theory of it. But what I think these consolidation patterns is compounding of positions, particularly on Bitcoin and on other assets with either fixed supply or fixed issuance rates of supply, where that's something that people can know what's happening, know when the supply is going to be introduced and all that. So what you have to do is, if you want to keep increasing your amount of supply, and that's the goal. For large players, your goal, if you're bullish on an asset, is to increase your supply net. So if you're bullish on Bitcoin for the next 50 years, which, or 30 years, which, I am, then, you want to be constantly increasing your percentage of supply, right? Because you think it's going to keep going up. But you want to keep doing it in a way that you're minimizing your high time frame slippage. So say that you have, say that you're one of the guys that bought Bitcoin back in, 2010 when it was, a few cents, 10 cents or something like that. And then, you bought a fuck ton of them and you have a bunch of Bitcoin. And then, all of a sudden, holy shit, Bitcoin's at, 1,000, it's at 20,000. You bought it for 10 cents. You have a lot, like you have price control at that point. You have a say in how high the price can go. And you have a say in when to stop how high that price can go. So you've got, this is more into the game theory of it, but if you want to increase your Bitcoin holdings, what you would do is you'd sell it off, right? So some big players probably sold all through here, right? And then when it dumped, hopefully they were able to buy back the Bitcoin. That if they're bullish, and this is their goal, and this would be my goal, is you'd want to be able to buy back all that you sold down here, and have generated so much sell pressure, like we were talking about in the ask and the bid videos. You've generated so many sell orders down here that you can buy it without price moving much. So you can buy it and know what your price is going to be, and it's not going to slip. Because if you're a huge player, say you sold off, say you had 10,000 Bitcoins and you were able to slowly sell them off as this whole run up, and then really sell them off to get it to capitulate. And this is kind of a conspiracy theory. There's probably not one person that did this. It's just actors that happen to do this together. I doubt there's, it's not one entity or anything like that. But say that you're one of those actors that had a lot of Bitcoin and you sold it all through there, and then you find a place where you can buy it all back. That's great. That means that you were able to trade with massive size, and still be able to have an entry and an exit price that was vastly different. Because if you're not careful, your entry and your exit price with big size is going to be, very similar if it's ranging like this. Because say, for example, you're buying 10,000 Bitcoin. If there's not that many Bitcoins being sold, every time you buy, 100 Bitcoin, you're pushing price up $100 or something like that. And over the course of time, even if you're using bids to try to fill, over the course of time, you're going to be raising price as you buy. So that's why these markets have cycles. That's something we'll get into more with the game theory stuff. But that's why, this is a big digression, but that's why I think that the triangles are happen and get respected. Is I think that it's evidence of high time frame and even lower time frame compounding, especially on futures exchanges. You'll see triangles form, and little bull flags form. Well, they'll do, like this. And what I think is happening there is the same. I think it's compounding. I think that people are taking profits on their leverage positions here, and they're slowly taking profits down, and they're using their spot supply control to keep the price stable, because liquidation is based on market price. We're really digressing here. I'm realizing I have ADD, so you just have to bear with me. But anyways, I think that these little consolidations are compounding of positions. Okay, so keep that in mind. Maybe that'll click with you like it did for me. Maybe it's irrelevant. I don't think it is. Draw the triangles like this when you draw them. If you're going to draw a triangle like this, put the midline. See if it fits two. If it fits two, I think you got a pretty good triangle. Okay, that's triangles for you. Triangles matter. They don't seem like they do. They seem like they're mean, but they matter. We can see that it's bounced off of here and all this stuff. Let me delete this chart again, and let's look at, what was I going to do with charting next? Oh yeah, horizontal levels. Let's look at like some shitcoins for horizontal levels. Let's look at Yes. Oh, no, I don't like XP doesn't have history. Let's get Doge. No, Doge is just wild. I don't want to look at it. Well, ETH isn't a shitcoin. ETH is arguably the best crypto asset, just saying. But we'll look at ETH's chart. We'll look at it for levels. So these are some levels I had. First of all, quick little flex, you know what I'm saying? I told everybody along this level, that trade's valid. I really think it'll go to target 720. ETH's just so bullish. Not financial advice. Anyways, we're going to delete. Oh, I can't delete that. I have to leave that thing up. We need to go to a different chart. That's my flex. That's my flex chart. And yeah, Bitstamp, sure. Okay, I've got some levels here, but we're going to delete them and start over. And what we're going to be looking at is, I got my little tool here, and we're going to start on the higher time frames. Okay, just like always. And we're going to start with the weekly, and then we're going to go down to the daily, and then we're going to go down to like the 4 hour and check it. And then sometimes you'll see you'll be on the lower time frames, and you'll see, well, it keeps getting really close to your line, but not touching it. You know, maybe you should adjust your line. Maybe you should look at the 15-minute, the 1 hour, stuff like that to make sure that your line is as accurate as you can be. You know, these lines aren't ever an exact science. They're always more of a cushion, but I like to have a line. It's like, actually, we'll start with lines and we'll put in cushions later. Okay. So that's clearly a level, right? Why is that clearly a level? Well, because we had some closes here. We had some wicks up here. We had a thing here where it went above it and wicked back down, and then went below it and wicked back up, and then it pumped really hard. We had it bounce here. You know, we had it wick into here. You know, we've had all of these closes. This level is something that's being defended heavily, right? 353-ish, right? Clearly a level, okay? So that's one way of checking it. And then we can go in and we can look at the volume like we did earlier. And we can say, okay, well, is volume high when it touches the line, right? Right here, we had a little spike in volume when it touched the line. That's good. Here, you know, we had some volume. All through here, we've had some decent volume. I'd say it's fine. If it was always low volume around the line, I'd be a little bit worried. I'd say it's fine. And it also depends on the exchange too. So anyways, we got that there. And then you want to get a rectangle is what I like to do. Get a little rectangular tool. And you want to give it a little range. These are never exact. They're never exact, right? So find places where there's closes and there's opens and there's, you know, there's a cushion like this. Because what they are is they're kind of like order blocks is what people call them, or similar to what order blocks are. And what it means is that there's just it's a level that traders have watched, and there's a lot of buying and selling that goes on at that level. And once we get above it, you know, there's the concept of support and resistance. And you're below it, it's considered resistance. When you're above it, if it confirms, like I did here, it's considered support. I'd say we got pretty strong support here now. There was weeks and weeks we spent holding this level. There's a lot of capital that was deployed. And that's why it's considered support, is because there were a lot of people that bought there. And so if it breaks below that again, it's probably a lot of people are going to sell because they're going to be underwater now. But the fact that there was so much buying here and so much capital, and we spent weeks and weeks and weeks, and it kept closing above our little level here, that means that, you know, we have to assume that there's rational actors. We have to assume that the people that are buying and the large players are rational, because if they weren't rational, they wouldn't be large players for long. They wouldn't be whales for long, or whatever you want to call it. So you have to assume they're rational, and they're all buying here, right? So when they buy there, that means that, you know, it's a level that they have set to accumulate, which means they think it's going to go up from there. If they think that, I'm inclined to think that. Like I said, we have to assume they're rational. So that's how you do horizontal levels. And you can look at, you know, other weekly closes and stuff like that, where there's just there's less confirmation there. You know, we haven't had much price action there. The less price action you have, the less you can really trust a level. But like, you know, we've had a lot of time dancing around this little level, setting this little level. And then you can see here that another thing I like to do is I like to, come on, give me, where I want to be. Okay. Another thing I like to do is to, remember how we were drawing triangles before, right? Well, draw those, and then draw that consolidation point I was telling you about. And at that consolidation point, just place a line. Why not, right? And then you can see the triangle there. We've got this clear little thing going on, and that's the apex. And then let's scroll over and see why I want you to do that. It's because that's a level. That becomes a level. For whatever reason, there was a lot of volume transacted there. That's a level that was fought before, right? That level was fought before. And when that level was fought before, you can place a little buffer around this here, and you can extend it out. And I bet that's about where price has been at. Yeah, so we're like at resistance right now, but I think it's going to go through it. And the reason I think it's going to go through it's for, you know, smaller time frame stuff, you know, the 1 minute, stuff like that. We're not going to go into that right now. But these types of consolidation patterns, the apex of them is often ends up becoming a level, because that means that people were, as price danced around that and formed that triangle, what it was doing was it was bouncing up and down above that level, and there were people on both sides, buying and selling there and stuff like that. So if people bought a lot of spot right here at this level, well, when price gets back up there, they might say, well, it's finally my chance to get out for the same price I got in, 2 years later. Probably not. They probably sold by then with all this price action. But it's a level where people are probably looking to sell, because whether or not they actually got in that level, or whether or not they anticipated and thought that somebody else was getting in at that level, that's a price that you want to keep an eye out for. I'm just drawing these little triangles where I see them. Let's see how many of them end up being something. Boom, that's definitely something, right? Why is that something? Because when we broke above it, there's something to watch out for. When you broke above it, we had a huge pump when we broke above, because that meant that a lot of people had their stop losses there, or a lot of people had buy orders there, that if it got above that level and confirmed it, they would want to buy. And so that makes it a level, because that means that a lot of people want to buy there, and a lot of people want to sell there. And then here we bounced on it, which meant a lot of people wanted to buy there. We bounced on it again. We bounced on it again. We confirmed it as resistance there. Clearly a level. And so these little triangles, for whatever reason, matter. And the reason I think it is, well, actually, I should have kept that up, but I'll put it back. The reason is, I think, because of the compounding thing. There's also some algos here. I'm just seeing these right now. Like I see another one here that we can check out. And I've been telling people this for a while. I don't see many people do this. It's something that you should be doing, and it might not work now that I told you to do it, but it'll probably at least work for a little while now that I told you to do it, until a lot of people do it. I mean, not that many people watch my videos, I'm sure. So once again, this is clearly like a level. Like, I didn't even look at that until I saw that's just something you do. Look for these consolidation patterns. This traditional type charting stuff works really well. So you want to have your horizontal levels, and you want to have your diagonal levels. And one good way to find the horizontals is using these consolidation patterns. One good way to find the diagonals is just kind of drawing through consolidation points. It could be opens, it could be closes, anything like that. And yeah, that's what you do. You find supports, horizontal resistances, and trend line supports and trend line resistances. Like ETH had one. So ETH's next big level is really, before I go any further, I mean, look at that thing. That thing's clearly a level right there. So this is where I have to take profit on the other one. You see that little triangle? I mean, I see it. I don't know if you guys see it, but that's the level. That's probably where this thing goes. Tried to get here before, couldn't make it. That's a level, and then there's another one. This is actually where I have my take profits first. It's like the first take profit. It's right here. It's like the safe one. I think that ETH's going to go to all-time high this cycle. I don't think we have much time. I'm trying to rush. I hope these videos aren't too rushed. And if you guys have any extra comments or want me to make another video elaborating on some stuff, I'll totally do it. If there's any interest, anybody watches these at all, who knows? I'll totally do it though. Just comment it or DM me on Twitter or whatever. So this is where I have there's levels right through here. Or maybe it's actually, I don't know. I kind of want this to I kind of want that to go to the bodies of it. I kind of want to do that. And then either intersect, so something like that. And I like that. Because it goes through, has this thing going on, Yeah, it's perfect. So that's about where you want to take profit, right around 700, 699, 95, something like that. That's probably where it goes if I had to guess from here. We'll see. This video is immortalizing my call, right? I really think that we're going to end up clearing this resistance. I think we've already wiped it here. When you see the price kind of wick, I mean, it already wicked through support. We already ate all those sell orders. And at this point, it's just inevitable. We're going to pump it eventually, in my opinion. Not inevitable, but it's pretty certain. Anyways, I'm digressing. That's how I chart. I mostly just use that. I use some MAs, and I use trend lines, and I use horizontal levels for support and resistance. Get the basics down, start messing with it, start drawing lines, and you can draw these on smaller time frames too. They work pretty well on smaller time frames. Like if this was going to retrace, I bet it would retrace right about there, 447, something like that. I don't think it will, but if it was going to, I think it would retrace somewhere around there. Why? Because we got this pattern here. Works on all times frames. It's for whatever reason. But yeah. So anyways, I'm going to delete this chart now and I'm going to go. But if you guys have any more questions about charting or anything like that, I'll make more videos on it. That's the basics, I think. I think it's a pretty decent basic video. It's pretty long. But yeah,